Hi, I'm Jim Jubak, and welcome to this week's Trend of the Week video. The global debt bomb is ticking. The warning from places like the World Bank and the International Monetary Fund is that about 60% of the developing economies who are facing debt problems that have been exacerbated by the fact they've got a lot of debt, they've got a lot of sovereign and corporate debt that's been dominated in dollars, and as the price of the dollar is going up, it's getting harder to pay. These countries have also, by and large, been hit really hard by the surge in oil prices, as well as many of them are agricultural, so they've been hit by the surge in fertilizer prices. So all these things combined, we're looking at a really lot of distressed countries out there, and some of them are going to default. And we saw the first one default, Sri Lanka. Second country to be in trouble, and it looks like the next one to fall is going to be Laos. Laos is running at an inflation rate of about 13% annually. Its currency, for those of you who don't know, is the kip, and that has gone from 9,400 to the dollar in September of 2021 to 15,000 to the dollar. Country has an external debt of about 88% of GDP, of which about half is owed to China. One of the big uncertainties here is, well, how are the Chinese going to handle the bookkeeping? China already owns, for all intents and purposes, the Laotian state utility company. So are they going to get more assets? Are they going to eat some of the debt? We simply don't know. So what this is not doing is helping emerging market stocks. This is a chart for the iShares MSCI Emerging Markets ETF, ticker EEM, for this year. And you notice it's just, there are some upsurges, but we're talking, in this section here, we're talking about pretty relentlessly down. And I think that's where we're going to go. So much so that in my volatility portfolio, I've added an inverse ETF to this, the EUM, which goes up when this index goes down. So it's a hedge against continued erosion in emerging markets. It's not producing so far the gains to compensate for the losses because I only bought it in here, but we're positive for the holding period. So, and I would look for more dominoes to fall. The next one seems to be from all international sources, Myanmar, where it looks like the military junta is in danger of actually losing control of the country. That aside, this is a country that's been in trouble. What worries me going forward is that as the Fed keeps increasing interest rates, the US dollar will get stronger, and these countries will face bigger problems in terms of getting repaying their dollar-denominated debt. Oil costs, most of these countries are not oil producers. They're importing their fuels. They're importing their fertilizers. A lot of them are agricultural. This is a really bad crunch in emerging world economies. Keep that into your risk assessment of the market, that this looks like we're moving toward adding more countries to this list. We'll keep downward pressure on this. If you like this video, please give us a thumbs up. Subscribe to my YouTube channel so you get a notification of when they're doing our next video. We're doing about 3 a week. If you want more of my stuff, you can go to my free site, which is jubakpicks.com, 3 portfolios. If you want 6 portfolios, including the volatility portfolio that hedges and uses options and inverse ETFs, go to my paid site, jubakam.com. Thanks very much for watching.